All right, welcome to Talkin Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about Marathon Digital Holdings, stock ticker MARA. They are a Bitcoin mining company. For those of you new to the channel, we follow Bitcoin and the Bitcoin miners all the time, so remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, I would appreciate it. It's really been helping out a lot, so thank you very much. And lastly, if you want to become a member, you can hit the join button on the YouTube page. Members get some members-only content. Also, we do a once-a-week members-only live stream. In addition to that, the members get to pick a video each week for me to do a deep dive on. So we'd love to have you over there. Let's talk about Marathon Digital Holdings. So I did a video on Marathon about a week ago. They had put out this press release. Marathon Digital Holding reports third quarter 2022 results. So they did put a press release out with the results. However, what they did not do is file their 10Q. So I was unable to really do an in-depth full analysis of Marathon. So I did say in that video that as soon as they put their 10Q out, I would round out my analysis of this because there's so many missing pieces. You know, some of it I think is good news, some of it I'm a little bit concerned about, but we'll let you guys be the judge in the end. I just want to get you guys the updated information because there was a lot of very important information in their 10Q. Okay, so Marathon closed at $7.47 on Friday. It's the weekend right now, so that was down almost 7% on the day Friday. Friday was a red day for the Bitcoin miners. Most of the Bitcoin mining stocks had a bad week this week, despite the fact that Bitcoin was relatively sideways for the week. This brings them down to an $872.8 million market cap. Those of you familiar with the channel, you know that I like to put that in perspective with their historical market cap because price does not always tell the story. This was a $7.54 billion company. When it hit its lows in the summer in late June of 2022, so that was about 5 months ago, this got down to about a $650 million company. So we've been from $7.5 billion down to $650 million. That's more than a 90% decrease. You'll see it's up from there. We are currently somewhere in the middle here at $872 million. So again, historically speaking, for the course of the last year, this is a very, very low market cap, but they have not taken out their summer lows. Right now, I want to dig into their 10Q. So we get a look at some stuff that we were unable to look at with just their press release. The first thing is their balance sheet. So total current assets, you'll see $240 million. Of that, $126 million of that was digital currencies. So that is the Bitcoin that they hodl. They hodl all their Bitcoin. They have not sold any Bitcoin in 2021 or 2022. So they have the most Bitcoin on their balance sheet of any company. Now, they did buy almost 5,000 of those almost 2 years ago. The rest of it is self-mined. That's more than half of their current assets. If I compare that to their total current liabilities, they only have $45.5 million of current liabilities. So that is a very healthy ratio. However, it's not exactly as it seems. So I want to dive a little deeper and show you one thing in here that could happen that could mess up that ratio. So their Bitcoin are in large part as of this point restricted. So I want to go through that because it's unfair to have them in current assets because really those are restricted and held in custody because they are securing some of the long-term debts. So they're showing $126 million of Bitcoin on the balance sheet, but 9,490 of their 11,440 Bitcoin are set aside as collateral for their debt. That leaves them with actually only 1,950 unrestricted Bitcoin on their balance sheet. So that kind of puts things in a little bit of a different perspective. Having said that, if we go back and look, you will see they have $55 million in cash. So even if you discounted their entire cryptocurrency balance, they do have more cash on their balance sheet than they actually have current liabilities. So, you know, unless there's some catastrophic downfall in the price of Bitcoin over the next short period of time, if Bitcoin can maintain this $16,000 price and maybe get healthier from there, then I don't think this is going to be a problem for Marathon, but they do have that exposure. They've left themselves open by borrowing this extra $100 million, all of which is secured by Bitcoin. The other thing I wanted to go through, so total assets you'll see is $1,475,000. Total long-term liabilities is $805 million. Total current liabilities is $45 million. So that's $850 million against $1.47 $1.75 billion. So their asset to liability ratio is good as well. However, there is one number on here that is concerning to me. I just think there should be more disclosure in the footnotes. I'm not saying that they did the footnotes wrong. I'm sure they've complied with whatever they had to comply with. But as a stockholder, as a shareholder, I would be interested in a little deeper dive, which a lot of the other Bitcoin miners give. And I'll tell you what I'm talking about. Advances to vendors. I'm really honing in on this one because this is $687 million. It's the biggest number number on their entire balance sheet as far as assets go. So this is the bulk of their assets. It's advances to vendors. There's no detail as to who those deposits went to and how much they were for, how many Bitcoin mining machines they were for, how many they've received, how many they're yet to receive. So there's a lot of details that are unknown here. And obviously, with an advance to a vendor, there's a counterparty risk. So this is $687 million of counterparty risk. So I'm not trying to press the panic button on this. I'm just pointing out a few things in here that really make them a little bit more vulnerable than one might think when first looking at their balance sheet. So there have been companies that have lost some of these deposits. I'm not saying that's going to happen to Marathon. I just would like more detailed information as to exactly who these deposits are with and when we can expect to receive all of their machines. Okay, so to me, those two things that I just talked about, those are really the red flags that jump out as potential areas of concern. The company has addressed this in another area, financial condition and liquidity. This is in management's discussion. So under financial conditions and liquidity, Marathon has said the company expects to have sufficient liquidity, including cash on hand and available borrowing capacity to support ongoing operations. We will continue to seek to fund our business activities primarily through the periodic equity issuances used on our at-the-market facility. So they have an at-the-market facility. I'm going to go through that next because I think they've been doing a good job with that, and I think there's a lot of maybe potential FUD out there about that. In other words, I just wanted to give management's counterpoint here that they're saying they do address liquidity as they have to, and many of these Bitcoin mining companies say they are concerned that they don't have the liquidity to get through the next year. But Marathon is not saying that. They're saying they expect to have sufficient liquidity. So it's important to note that that is their position. I just want to go through share dilution because a lot of the comments that I get, and I know a lot of the fears out there, is that these companies are burning through their at-the-market offerings and diluting shareholders massively. But I'm going to take a look and I'll show you. I compared the Q3 financial statements to the Q2 financial statements, and I've calculated exactly what their stock dilution was. So particularly as it pertains to the at-the-market offering that they have, that dilution in the third quarter, they diluted 2.55%. So obviously, that's not zero. There is some dilution there, but it's not some out-of-control number. 2.55% in the quarter, I think, is well within investors' expectations. So I think they're being diligent with their at-the-market offering. They're getting that cash and using it as needed and only as needed because obviously everybody's stock price is very low at this point. So total dilution for the entire quarter was 2.59%. So not much dilution past their ATM shelf offering. So I just wanted to show people this because I do know everybody is very concerned and there's a lot of fear about this. So for me as an investor, I don't look at this as excessive at all. I think this is a very reasonable use of their shelf offering. That's what it's there for. So I like what they're doing from this perspective. Okay, lastly, I just want to mention, I mentioned this in the previous video, and now we've had another week go by, and it looks to me like November is going to be a little bit of a disappointment. So when their October report came in, they did mine 615 Bitcoin. So that to me was the first signal in a long time that they are starting to track towards what they say in their monthly operational updates. However, as I look at their mining this month, they have fallen well off of this pace. So it's gotten a little better since a week ago when I did my last video, but it does not look like they're going to be able to match their October output. Depending on how the month finishes out, they're going to end up anywhere from 475 to maybe 550 Bitcoin mined, in my opinion. Obviously, they could surprise us and ramp up and do more than that, but they're on pace to fall well behind October. So that will be a little bit of a disappointment. However, I do want to wait for the November operational report that they will put out in early December so that they can explain what their November numbers are. We're getting a sneak peek at them because they have their own pool, but I think in all fairness, we should wait for them to put out their report and tell us exactly how many they did mine at the end of the month and why if it was less than the month of October. Because as far as their exahash rate goes, their exahash rate continues to increase according to their operational updates. They continue to activate machines. So just a quick look at their stock chart. I'm not going to go too much into this, but I just want to show you that here you'll see this was their summer lows. They did get down to $5.22, which was an incredibly low number. This was over $80 stock at one point. Since their August high, they're now down 60%. So that sounds like a lot, and it is a lot. However, it is actually better than all the rest of the Bitcoin mining companies. Everybody else has already taken out their summer lows. Marathon is still about 40% off of its summer lows. So despite the fact that this has been a tough week and a tough month for Marathon and that they are way down off of their August highs, they still are outperforming all the rest of the other stocks in this industry. In my last video last week, they were trading just under $10, and I said I did think there was some downward pressure to come. They're now at $7.47, so they're down about 25% since we looked at them last. So I think we need to wait and see, but we got an awful lot of information out of their release of their 10Q, so hopefully this rounds out the holes that were still left open in my last video because we didn't have that information. So if you made it this far, remember to subscribe to the channel and smash the like button. Thanks so much for watching. I'll see you in the next video.